Hello and welcome to my YouTube channel. My name is Joris and today I'm going to continue with my series about European ETFs that invest into real estate, and today it's part 4 and I'm going to discuss two ETFs that invest into the UK and one that is investing into properties in Asia. So real estate, I'm going to go over this quite fast, so I'm only going to discuss about this opportunity of investing into real estate, and that's with real estate ETFs. So that's actually option 3. The first one is your own home. So if you haven't got your own home, just invest in that one first. That's the most important one you can own in the real estate sector. And then option 2 and 3 are totally optional, so not financial advice. But if you own more real estate than you own your own home, then I think you are on the wrong track and you should reconsider your investment strategy and first go to try and buy your home first. The performance of the global real estate, so I think it's always important to repeat this. So from 2008 till now, it's the past 16 years, there was an average return of 4.4% annual compounded. And in the past 6 years, from 2018 till now, there was a 3.1% annual return. So that's really important that you know that. They don't perform as well as the complete stock market, but they can be a good addition to your portfolio, because yeah, most ETFs, they don't include real estate. And if you want to diversify your portfolio with real estate, then you should look at ETFs that invest into it. But always remember, it's only one sector, so it is really cyclical. And cyclical things, yeah, it's really important that you, and I know that I'm repeating things quite often, but you should consistently invest into it. And that's why my wife and I didn't already start with investing in the TRET ETF that we chose for our core satellite strategy, because yeah, we simply don't make enough money to be able to invest in the different ETFs consistently enough that we selected for our core satellite strategy. And that's why our real estate portfolio is yeah, only containing our own house here in Switzerland. So yeah, that's unfortunate, but that's just the way it is. And in this video, we are going to discuss the IUKP, the UKRE, and the IASP. And the UKRE, you see it's in violet or purple, so that means that it's not available on the SIX stock exchange. The other two are. And the IASP, that's actually the Asian one, and the other two are the UK ones. And these are the ground rules, and the most important one is the second one, that I put all the performances into Swiss francs so that they are comparable across the board. So the first ETF of the UK ones is the iShares UK Property UCITS ETF with a total expense ratio of 0.40%, and it's an Irish-based ETF. The currency on the SIX stock exchange is Swiss francs, and on the 28th of March of 2024, the price was 5.22 Swiss francs, and the currency of the dividend that it pays out is British pound. The ETF contains 43 holdings, and there is 740 million invested into this ETF. The past year performance was 13.33%, and the past 3 years and 5 years it was down minus 20%. So minus 20%, the European ones were worse, but the global ones were a bit better. And once again, 2007, terrible timing of iShares to start a real estate fund, but it's just the way it is. So if you look at the complete performance since its inception, minus 63%, that's terrible. But yeah, it's iShares doesn't know when they should start it as well, and once again stressing the fact that you should consistently add to your investments if you are convinced of the investments that you made, of course. It pays out 4 dividends per year, and the dividend yield is a little bit over 4%. And in this case, once again, more evenly distributed across the quarter. So UK much better than European ETFs for sure. Excuse me. Then we have the UKRE ETF, so noted on the London Stock Exchange. Excuse me. On the London Stock Exchange and also on the German stock exchanges. But I took the one from the London Stock Exchange, and it's in British pounds, 4.16 on the 28th of March, and 39 holdings in this ETF and 113 million invested into it. And the performance over the past year up 9.60%, and over the past 3 years and 5 years, yeah, minus 15% more or less, so better than the previous one. And it's being it pays out 4 dividends per year as well, but in different months. So in January, April, July, and October. And the dividend yield is also the highest one of all the ETFs so far that I mentioned, and from the ETFs that I still need to mention in the next video as well. Then that's going to be the last one. So the dividend yield is 6.03%. And here you can see quite nice distribution of the dividends over the quarters in a year. So actually, when you look at this, it's a quite nice ETF for people living in England and Germany. And then we have another one from iShares, the IASP, and that's the Asia Property Yield. So not a UK one anymore. And the total expense ratio is 0.59%. So once again, quite high for BlackRock. And it's noted in US dollar on the SIX stock exchange with a price of 20.81 at the end of the trading day of the 28th of March. And there are 131 holdings into this ETF with 281 million invested into it. And yeah, here it's negative across the board. So yeah, we know in Asia with the problems going on there that the real estate market there isn't having the greatest time of their life there. So the past year minus 3.47%. That's still actually quite good. I think the past year was actually worse, but yeah, they are of course in China it's quite bad, but then in Japan it's going the right direction. And then for 3 years and 5 years, minus 20 and minus 19.33 and minus 25%. So quite bad. And once again, 2007, 2008 included, 2018 included, 2020 included, 2022 included. So all negative years, and in Asia you have more negative years, especially in the past 5 years. So since its inception, not even up 9%. So yeah, it's it's a sector where you really need to look where you put your money. So 4 dividends per year in February, May, August, and November, and the dividend yield is 3.80%. And yeah, the dividends are quite evenly distributed. But if you look at the performance of this ETF, then yeah, I wouldn't be that keen on starting to invest into this region. And yeah, here you can see it once again in an overview. But Asia isn't great. But if you look at the UK, yeah, the IUKP actually is also quite bad. Then the UKRE is performing much better, but still worse than the global real estate ETFs that I mentioned in the first video. But on the other hand, the 1 year performance for the European ETFs that I mentioned in the previous video was better, but the 3 year performance and the 5 year performance of the European ones were much worse even. So yeah, yeah, what can I say? Europe in the past 5 years had actually a really bad real estate. How do you need to say it? Environment for real estate in the past 5 years. So if you were a real estate investor in the past 5 years, I think you you had a lot to chew on. So, but better times are ahead. So in 2023, it already went up quite a lot, and now with the ECB, maybe I'm saying maybe going to reduce the interest rate. It can be that this year 2024 is also a year with 20% up. So let's cross our fingers for that. And with that being said, thank you for watching this video. Please consider subscribing to this channel. Also hit that like button. It helps let other people view this video, shown this video as well. So, and when they see it, maybe they click on it and they can then subscribe as well. And that gets the snowball running. And as dividend investors, we like snowballs. So thank you for watching and see you on the next video on my YouTube channel. Bye.